Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, as we start a new week, we're coming into the middle of the month. We have a Fed meeting this week. We've got a lot to unpack tonight. So let's go ahead and take a quick look back on what happened last week. We saw the S&P up 2.6%, the NASDAQ up 3.1%, and the big winner was the Russell up 7.1%. That rotation to the small and mid caps is continuing, primarily in the small caps, but even the Dow Jones was up very strongly last week. We had new highs in the S&P, we had new highs in Russell and Dow Jones. The NASDAQ continues to lag as the large cap tech stocks continue to drag on the markets. But overall, what we're seeing here is a grinding up to the new highs. Now, the Dow Jones has been the strongest, but on the S&P, which I focus a lot on, is actually really struggling here, and we continue to have very low momentum as the market goes up. I'll cover all this in the technical section here in just a few minutes. Let's take a look at what's going on this week, because I do believe this will be significant. On Monday, we had the Empire Manufacturing, not a really big report, but it will lead us into basically market sentiment. On Tuesday, we start the Fed meeting, as well as get a number of key statistics that are going to be coming out. We have retail sales expected to be up 0.2. We have capacity of utilization, which is expected to come in at 76%. We have housing starts expected to come in around 1.5 million, and then the building permits will also be out, expected to show 1.8 million. And the housing market's been a little flat over the last couple of months, but it looks like from a supply standpoint, we're going to continue to see that be under pressure. So let's talk about, as we come into this week, there's a number of things I want to continue the saga that I started last week with this shipping situation. There was a weather event that came through northern Arizona all the way into Colorado and beyond. One of the things I discussed last week was the backup at the LA Port Authority and Long Beach, and that the shipping channels were backed up even from trains to trucks. Well, this snow event, there was a 40-mile jam up of solid 18-wheelers on I-40, which is a shipping route that takes things to the north towards Chicago and the northern part of the country. I-10 takes everything down to the south. So we're basically saw this thing jammed up big time, but it was just an illustration of just how many trucks there are out there. So this brings up my key point that I'm going to drive home here is I think that inflation is going to continue to see an acceleration over the next several quarters, not just for a month or two. And I was asked a question as why didn't the markets react when we went into a new high on the 10-year above the 16.2? It appears that most market participants have accepted that we're going higher in yields, and 2% is probably okay. So above 2%, that could be a problem. And one of my biggest concerns on the 10-year is that we could see a spike in yields and take it up to 2.5%, 3% on the 10-year, like the taper tantrum that occurred several years ago, but it will be for a completely different reason. This time it's going to be because of inflation expectations, but we're going to keep that on the back burner for the moment. I don't think that will be a factor this week, other than the fact that we saw Janet Yellen running around on TV shows telling us that inflation is not the problem and rates are going up because of demand, and that's true. I talked about that last week.
I'm your fairy godmother. I'm here to make it all better.
With just
A wave of my magic wand, your troubles will soon be gone. With a flick of the wrist and just a flash, you'll land a prince with a ton of cash.
But really what I see happening here is that they're trying to take cover for what's going on with the inflationary scenario. So we're going to see more of this when Powell talks this week and what the Fed releases as a statement. So people are going to be watching this really closely. This is a precarious position for the markets as the expectations continue to be somewhat mixed. The stimulus is done, everything's been signed. We're seeing a little bit of a bid overnight in the futures, but overall what's happening here is market participants are very cautious, even though we've managed to inch our way into all-time new highs. The fact is that we're making all-time new highs doesn't mean there's an acceleration. As I said, I'll go through a lot of details here in a minute in the technicals to unpack what's going on. Now, the other thing that I talked about on Friday's video was our database, and the intermediate database had very little activity. In fact, the net change was less than 1%. We continue to be at a 75.81% bullish. On the short term, we did see a fair amount of buying of over 600 symbols coming in, and we moved the percent bullish back to 31%. And I'll go through all these details on the database here in a minute. But as we come through this week, there's going to be a lot to digest from an economic standpoint, the Fed. There's going to be a lot of noise in the markets this week. My expectation is that volatility will pick up and we'll start to see some bigger moves on an intraday basis. The only other thing that I want to bring up before we get into the technical side tonight, as we still have about 400 earnings reports coming out, nothing really big, but there's a couple companies in there that might actually trigger some activity. I'll update that as we go through the week and we get closer to that. Most of that is on Wednesday and Thursday, but the markets are going to be focused on the Fed and other elements that are coming out. So I don't think the earnings will have any impact, but there's always a surprise that can occur. Let's go ahead and take a look at the charts, see how they're set up for this week. As we begin with the WaveTech Database review, looking at the intermediate, as I mentioned in the opening comments, we're at 75.81% bullish. There was very little movement. There were just a touch over 250 buy signals versus about 340 sell signals. So it was slightly negative, but not material. So it moved the meter down to 75.81. As we go to the daily, what we'll see here is there was a fair amount of buying. There was just a bit over 600 buys, only 130 sells. So we had bullish ratios on both of those. We moved up from 27% bullish to 31. And as I've talked to you a lot about this, the 42% level is the point where we start to see some acceleration, and there's enough trends evolving that are going to suggest that we're going to move further into a new cycle. At the moment, we're still somewhat in a neutral cycle from a short-term database viewpoint, but that doesn't mean we're not going to be moving higher in the pattern. It just means that the market has become very narrow and what's participating, and the rotation is still very evident here as we look at we'll see if it can get further traction and get back up above that 42% this week. In conclusion, the intermediate database continues to signal higher prices, while the short-term database is neutral to slightly positive. As I just mentioned, it will take a move above 42% to really start to bring enough stocks in here to push the markets substantially higher. As we begin the review of the S&P futures, we're seeing them up 4.25 handles overnight. It's really struggling. You'll see that PPM 1 is turned down. PPM 2 and 3 are not getting an acceleration. It is basically climbing the wall of worry. It does have a basic underlying positive tone, but it's very minor at this time. From a short-term viewpoint, it looks like the market wants to pull back into these moving averages, possibly before moving higher, which would mean a 38.80, 38.60 type pullback. I'm not sure that's going to happen right now. As we look at the market grid, the numbers that are out there are R1 39.55. We printed a 39.57. The S1 number is 39.29, so we haven't come close to that. I would suspect we'll see at least some downside to the S1. The possibilities for an S1 R2 are very likely if we can get above the 39.57 highs that we printed so far overnight. It doesn't look like the markets will reverse to the downside at the moment, especially ahead of the Fed meetings and some of the elements that are coming out from a news viewpoint on Tuesday and Wednesday. As I look at the SPX, you'll see that we are still seeing the market grid narrow a little bit, which is concerning, which is starting to suggest that we could see a minor pullback. Nothing major here, it doesn't appear. It's still, even though we printed a new high, there's still an element there that we're locked into this trading range. We get up toward this 39.50 level, there seems to be a lot of resistance up here. So the possibilities of a move, as I mentioned a minute ago, back toward 38.82, 38.68 is possible, but there's no real signs that that's going to happen at the moment. As I look at the market grid for today, 39.34 is going to be the key number in the pattern. So S1 39.34, R1 39.51, which is not quite a retest of the highs. R2 is a retest of the highs at 39.61. Above that, the R3 RXT numbers are at 39.70 and 39.78. My expectation is that we'll see an S1 R2 possibility for today. Looking at the weekly chart, last week we printed up just above R3. We came up just short of the RTX number on a weekly at 39.73. The intra-week high last week was 39.60.27. As we look at the market grid for this week, R1 is 39.80, which would be a new high, and S1 39.06 would be the possibility on the downside. If we get above the 39.80, then we're heading for the 4,000 level, 4,021, and you can see the numbers here on the grid that projects us all the way up to 4,063 on R3 move like we made last week. It does appear that the 10-week moving average is going to continue to be the primary demand line, and that number right now is at 38.47. It's going up about 20 handles per week, and that takes us right to that number, that 38.60 area that I discussed on the daily charts. That's going to be major support, and at the moment I don't really see it getting there. But going back to the market grid for this week, as I mentioned, 39.06 is going to be the key level. Just like a couple of weeks ago when we were above the 3900 level, this will continue to be the pivot area. 39.06 is going to be the key. If it takes that out, you can see right down to 38.64. So I talk a lot about these cluster numbers. There's a ton of clustering numbers at the 38.60, 38.80 levels. The key to this will be if the market gets below 39.06. If that happens, then the 38.84 to 38.64 levels are going to be in play. Next market overview is the NASDAQ futures. They're up 13 handles right now, 12,936. As we look at the market grid for today, R1 13,004. So that's going to be the first resistance point. But just like in the S&P, I'm expecting to see an S1 R2 number, which would suggest 12,844 would be the low. We fell just short of that with earlier weakness in the overnight session. But the penetration of 13,004 will signal a move to a minimum of 1393. Let's take a look at the weekly chart, because I think that's where we're going to see a little bit more of this pattern that's unfolding. The 13,140 level is the 10-period moving average, but it is actually declining now. So there's going to be a fair amount of resistance, and we've seen this number print a couple times at 13,140 to about 13,200 and change. This has been a substantial resistance point over the last couple of weeks, but it does appear we could stay for the moment between the 21 period moving average 12,704, and the 10-week moving average between 13,140. If we look at the market grid for this week, an R1 is right there at those numbers, 13,154. R2, 13,412. That's certainly a possibility. You have to look at the action in the weekly charts last week on the NASDAQ as a minor reversal, even though it was an inside bar. That suggests that we could see some follow through and at least see an R2 number. So S1, R2 for the week is the expectations for the moment. The final market that I'll cover tonight is gold. I'm actually very encouraged by the structure that's coming in the daily patterns right now. We did print down to just below that 1700 handle that I mentioned on Friday's video. We get down to 1696. The STX number is 1694. Market reversed from there, finished up around S1 at 1790.80. But it was a decent little reversal pattern, and most importantly, got above a number I also referenced was the 1713 level, which is the 10-day moving average. Now we look at the PPM1, it's still flat. It's up at 0.01, which is not really any trend. The downtrend is still in place with the PPM2 at 0.26. That suggests the 1753 level will be resistance. So my expectation is that we'll move up towards 1748, 1760. I talked about these numbers in Friday's video. Let's go to the weekly chart and see what that's telling us. The 1783 is a substantial resistance. That is the 10-week moving average. It's down at 0.64. That suggests there's only a 20% probability for the market to move above that level, which is 1783. So I suspect the markets will be constrained somewhere between the S1, which is 1700 exactly, and the R2 number, which would be 1759. It could spike up to the R3 number, which would be a move up to that 10-week moving average, but I don't expect to see that happen. So looking for an S1, R2 weekly. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night.